Now, this may seem very simple. Buy support, sell resistances, right? Very simple idea, but you have to understand, when are you actually trying to buy supports? When are you actually trying to buy resistances? So we're going to talk about two things. We're going to talk about trend trading, right? Trend trading, and we're going to talk about counter trend trading, which is, and these two concepts are equally as important. So first, we're going to go over what's the trend, how you're trying to gauge market structure, how you're trying to gauge candles movements, and then we're going to talk about counter trends, because a lot of times what happens is, like, for example, price starts to rally and price is rallying, amazing, perfect. What traders like to do is they're like, okay, like, what, price is rallying, and I see a resistance to the left-hand side, and because of that resistance, we will reject that area, and then you take a sell. So when you take a sell, essentially what's happening is you're trying to take the opposite trade of a price that's moving up. Or if price is moving down, like we say, falling knives, if price is moving down, you're like, okay, what? I see a support. And based on what I've studied is that we're reaching a support, there's no confirmation for buys, but I see a support, and I'm going to take a buy right there. And when you take a buy right there, or you take a sell all the way up over here, price starts to rally up. Or if you take a buy, price starts to keep on dropping down. And this used to happen to me as well, because we're trying to counter trend. We're trying to catch that wick trade. We're trying to catch that perfect entry to have a winning trade. So we're going to go over that. First, we're going to go over trend trading. Next, we're going to go over counter trend trading. The concept is very similar, very simple. This is why it's a smart Roger concepts, very, very simple concepts. But the only issue is you have to wait for the candles to print the way you should have them printed, right? So let's talk about that. All right. So what's the basics of a trend? Now, a lot of people know this as well. A lot of people have even studied this through our live streams, through our videos on YouTube, stuff like that. But it's always a good idea to go over the basic concepts, because the basic concepts are something that build your foundation, and a strong foundation is what you need to be profitable in the markets, because guess what? Markets are not complicated. Markets are just as complicated as you're going to make them. So we're going to go over that right now. So the basics of a trend is this: price moves up, we create a high, price comes down, we make a higher high, price comes down, we make a higher high, and so on and so forth, right? That's how price moves. Now, when we're taking a look at this from a candle's perspective, right? What happens? You have a candle that prints bullish. Now you want the next candle to move up. Next candle should respect the low of the previous candle right over here. So now we have a higher low and we have a higher high. Now the next candle has to respect the low of the previous candle and continue to push up. So this is the basic idea of price moving up, making higher lows and higher highs based only on candles. Now, we're going to go into trend trading. If I can find my magic eraser right here. Okay, found it. Awesome. Now, trend trading is really simple. You identify the trend, and the way you identify the trend is basically you see where the higher time frames are moving. Now, let's say, for example, you're looking at the daily time frame, and the daily candle, you see that, we're pushing up over here. You're like, okay, what, daily candle has to move up. You look at the 4-hour candle, and, maybe the 4-hour candle is, somewhere situated like this. We have a candle like this. We have a 4-hour candle forming like this. And you have clean range to the left-hand side. And you're saying, okay, what, the 4-hour candle is also bullish because we're creating support. Okay? Now, the basic idea of trading a bullish trend is that you're waiting for price to create support. Make a note of that. To trade a bullish trend, you have to wait for price to create support. That support could be on the 4-hour time frame. That support could be on the 1-hour time frame, 30-minute time frame, 15-minute time frame supports. They are okay, but the problem with the 15-minute support is that the confirmation is weak. It's a weaker confirmation. So that's why we're looking at the, I would say ideally, the 30-minute time frame or the 1-hour time frame, right? So you have to look for supports on the 30-minute and a 1-hour time frame. Now, let's say that we are in a bullish trend, right? So we're going to remove this and we're going to draw up some proper examples right here. But this trend is also identified on the daily and the 4-hour. So if you have made up your mind that the 4-hour is bullish and there's a high probability 4-hour can move bullish, you have to wait for supports. The supports are formed on the 1-hour and 30 minutes. So let's say, for example, Okay, so let's say for example we have a bullish candle moving up. This is a 30-minute time frame, moving up, moving up, moving up. We are moving up right here. Okay, awesome. We moved up at this point. Now we have formed a resistance at a zone on the 30-minute time frame. Now, if you've gone through the section of zones and ranges, you may look at this and say, okay, you know what, Raja, based on that virtual class we did, prices at a 30-minute zone, and 30-minute zone is a very strong zone, so there's a higher probability it can go down. Why can't we take sells? The reason why you can't take sells at this point is because, let's say you take sells at this point in a heavy bullish trend, and you have pre-London volume, London open volume, New York open, NYC, whatever that is, but the time is when there's a lot of volume, right? So let's say you take a sell. What can happen is, if you're not focused on the trend, is that the next candle can break this high right here and continue pushing up. That's something that can happen. So whenever you have a bullish trend, you're not looking for sells. No, you're looking for buys at this point. And we're going to talk about the condition for sells as well in a bullish trend. So let's say you have, like, you know, a rejection right here at this point, and now price starts to go down. We're moving further down. We're moving further down right here. We're moving down here. And let's suppose the trend is coming all the way from the bottom, and now you have a support form, right? This is a support form. A support is formed when you have a bullish candle closing after a bearish candle, right? The only forms of supports you're looking at are in uptrends. Always remember this all the time. Trend is your friend. Don't trade in consolidation unless you have a bigger range, right? And when in a trend, wait for supports form. These supports could be in the, these supports could be a part of your 30-minute time frame, your 1 hour time frame, right? The higher the time frame, the better. But the 30-minute time frame, strong supports. Now, first things first, right? Your support is formed. You waited for the support formed in an uptrend. Perfect. You got your support formed. Now, at this point, you're measuring the range, right? Let's say this range on the 30-minute is about 30 pips. You got a 30 pip range. You got a support formed, and you're like, okay, like, you know what? I have enough range to take a trade for price to retest this high. Now remember this one thing. Whenever we're in a trend, whenever price is in a trending market and it makes a high, there's a high probability, there's an 80% probability that that high is going to be retested. And how is that high going to be retested? If we're going to create support. So if we're creating support at this point, there's a high probability for price to continue pushing up if we're creating a support, right? And your stop is below this candle. That's it. That's all what you're looking at. It's a perfect example. This happens all the time. All the time it happens like, you know, clockwork when there's times of volume. So whenever you have an uptrend and you're anticipating 4-hour candles to go bullish, you're anticipating the daily candles to go bullish, you're waiting for 30-minute or 1 hour to create support and to continue pushing in the trend direction. That's where you're only trading the bullish trend. Now, sometimes you can have different variations, and these variations could be like, you know, you can have a bearish candle forming like this, and you can say that, okay, like, you know what, we got a bearish candle closing with a small body. This means that maybe the move pushing down, the volume of bearish candles moving down is decreasing because now you have a smaller body. Because always remember, the candle bodies are going to tell you how much volume there is in the market, right? So you have a bigger body, bigger body, bigger body, boom, you got a small body at this point. What are you trying to do at this point? Are you trying to wait for a support formed, or are you trying to take an impulse entry as the next candle breaks above this high without breaking this low? You're taking an impulse entry at that point, right? Because sometimes, like, you know, if you're new, you're going to say, okay, you know what, I'm going to wait for the support form, and you're going to wait, and as you're waiting, candle starts to pump up at this point, and candle closes like this. And now you're like, oh man, I knew price is going to go up. Like, you know, how did these people take impulse entries? I don't understand this. So the more you see price move up without you being not in the trade, the more you're going to learn about impulse entries, because the more you're going to see, because when I first started about impulse entries, I would see price move against me all the time. And I would say, okay, you know what, why is price moving against me? And I'm not in that trade. How could I have been in that trade? So I'm like, okay, you know what, if trend is where price, makes a higher high and a higher low and all that stuff, and if this candle is respecting this previous candle's low, which means it's making a higher low, and if it's breaking above this high right here, this means that it's making a higher high. So if I can take an entry as it's breaking the high and have my stop below this candle or even this candle, maybe and if a trend is up in this volume, maybe I have a higher probability of winning that trade with an impulse entry. Make sense? So that's how this whole impulse entry thing came into being, like by watching price move when you're not in that trade, right? So go over these things, right? Go over this virtual class again. Now, let's say we have created a support, right? So we're going to talk about this. So let's say we've created a support right here. Let's say we've created a support right here. Now we have a support at this point. Now, okay, let me just bring this up here a little bit